Welcome to TradeTheMBI.com. This is John. This report is for the 9th of September. Well, the turnaround move from the MBI magenta here as it got over white was the early part of the turnaround we saw with the orange dipping. Didn't quite get below, so we didn't have super strong confidence in that complete setup until that magenta took over, and that brought us right back up to that previous algo. And we kind of fought back and forth the other day on it, but once it was close above it, it clearly became long strong at that point. And interesting that we have slight lead of red over the magenta on the MBI reading, which means that any breakdown of the magenta at this particular stage would be catastrophic from a long standpoint because you'd probably end up below 50%. You do have green over shorts on the cyan here on the DOC. Now, if that inverts, of course, you get the spider that I referred to, and that would also be a negative, in which case that 39.93 becomes relevant at that particular stage. We're significantly far away from it at this particular point, so I don't know that it's going to be all that relevant at this stage. But those are the things to look out for should anything change weakness wise becomes relevant at that stage. You can see from the NASDAQ, it's much stronger. Magenta is clearly over the red in this particular case, and the nice dip of the orange. It's a little softer from a DOC with the green over cyan, but nonetheless still over. So it's a recognition that buyers have significantly overtaken short interest at that particular stage. We're also seeing a rally in the euro. Um, all the hawkish talk and the fact that rates are going to be rising in the US means that they must rise for the euro as well. And they think that they've solved their energy issues. So a lot of excitement for the euro, none of which we think is actually true, but true doesn't really matter when it comes to markets, it's perceptions, and that's what rules everything. From a gold standpoint, little bit of a comeback. So the expectation maybe that there isn't going to be this deflationary pressure as we've seen gas prices fade a little bit, easing some of that drama, but also means that you could have a continual increase or just soft increase in pricing, not that you're going to get have any reductions, so to speak. And that's kind of what the market was pricing in there from a gold standpoint, was this idea that we would enter in a price deflationary episode, and it's not quite the case. So you can see the new lows that oil made pushing right back up to them, but still at a much softer level than we've been at. So from that standpoint, the longer it remains there, the less stress that you have, and the longer people have to absorb it. And obviously, having hit the peak and come back from that makes it a little bit easier to absorb some of that from an economic standpoint. We can see the TLT heading back down towards the lows. No surprise there with that Fed talk being as hawkish as it is. It has to even go lower because yields are going to rise. Here we are from a Bitcoin. It took off with the market. Look at that move from a 60-minute chart, was clean. It keeps holding that key 18 level. And once we get right into that early 19, which is where we have the daily algo levels at, keeps finding support right there. So that's a nice push forward, getting it back into a safety zone. You can see from a 50K standpoint, this was the kind of muck that we saw throughout the day. Kind of interesting, and it sort of related to the beginning of what will be contract rollover, because we got this kind of truncated day setup. Not really as valuable because once you did the adjustment from what actually took place, it was far different. But needless to say, that was kind of what you would look for from a holiday setup. But the buy configuration from towards the end of the day and the continuation of it, pretty clean. Starting to create a few positive extremes already on previous algo levels. So um, literally identical right on that 4031. So no surprise that that took place at that spot. And we've jumped all the way to the next one, which was up at the 53, and we're slightly above that at this particular stage. So all in all, good turnaround, short cover rally in a broader aspect, but still a lot of interesting details, and the ranges that we're getting fantastic. So volatility is doing exactly what we thought it would, keeping it elevated, and probably not going to get any softer anytime sooner. So I would look for those ranges, and that's why you've got to be flexible to just go with where the momentum of things is headed at this particular stage. As always, though, anything relevant, I'll put it on the Skype chat. Trade well. We'll talk in later.